Hey everyone, Bill Constain, Freedom Wealth TV, and a special video tonight. Some big things are happening here. Federal Reserve in the United States cutting rates to zero and launches massive $700 billion quantitative easing program. We're going to talk about the impact of that, what the market's looking like for tomorrow morning's opening, and just what my general thoughts are. So here we go. If you like that type of content, make sure to like, comment, subscribe, hit that notification bell, and share it forward with other people that are also concerned about financial security and freedom. So without any further ado, here, CNBC, I'm sharing different articles from different places, Fox, CNBC, Wall Street. I want to make sure you know that we're independent thinkers here. A matter of fact, I own Freedom Wealth Services, which is an independent financial services company, and we go through many, many companies, always putting our client first. So, key points to this. In an emergency move, keyword emergency, on Sunday, the Federal Reserve announced it is dropping its benchmark interest rate to zero. Shocking. And launching a new round of quantitative easing, which basically means they're going to be printing a lot of money, a lot of dollars, printing more dollars. And guess what? Do you and I get to print dollars? No, we don't. So that makes our dollars probably a little less valuable over time if the Federal Reserve gets to print more and more of it. So watch out below. The quantitative easing QE program will entail $700 billion worth of asset purchases entailing treasuries and mortgage-backed securities. So in the comment, let me know what you think. You think this is good, bad, short-term, long-term? How do you feel about this? Well, the market immediately responded negatively. Now, typically, when the Federal Reserve cuts rates, usually the market goes higher. Why? Because people don't want to stay in cash. Interest rates are going down. They don't want the low interest rate on CDs, bonds, treasury bills, and they put it into the stock market. Well, the market responded negatively with the Dow Jones futures pointing to a drop of 900 points already, and that's Sunday, when the market opens Monday morning. Okay, so watch out. There's Federal Reserve Chair Jerome Powell holding a news conference following the Federal Open Market Committee meeting in Washington, December 11th. The Federal Reserve says the coronavirus outbreak has harmed communities and disrupted economic activity in many countries, including the United States. So in the comments, do you think the coronavirus outbreak has harmed communities, or do you think the media and the hysteria has disrupted economic activity? Just curious to see what you think on that. Cut interest rates to essentially zero on Sunday, launched a massive $700 billion quantitative easing program to shelter the economy from the effects of the virus. The new Fed funds rate used as a benchmark both for short-term lending for financial institutions and as a peg to many consumer rates will now be targeted at 0 to 0.25%, down from a previous target rate range of 1 to 1.25%. Well, could be good for mortgage rates looking to refinance or new home buyers. Could be good for all of you. Maybe it'll spur the market, or maybe it'll just save some of the pain. Very curious to see what you all have to say here. Facing highly disrupted financial markets, the Fed also slashed the rate of emergency lending at the discount window for banks by 125 basis points to 0.25% and lengthened the term of loans to 90 days. Well, despite the aggressive move, the market initial response was negative. Dow futures points a decline of some 1,000 points and so forth. So I'm going to leave this article in the description here. But let's see what else it's got to say. The Fed also cut reserve requirements for thousands of banks to 0, so you don't need reserve requirements. That could be dangerous. No reserve requirements. Interesting. In addition, the global coordinated move by central banks, the Fed said the Bank of Canada, Bank of England, Bank of Japan, the European Central Bank, the Federal Reserve, The Swiss National Bank took action to enhance dollar liquidity around the world through existing dollar swap arrangements. All right. Well, the bank lowered the rates on these swap line loans and extended the period for such loans. The actions by the Fed appeared to be the largest single-day set of moves the bank has ever taken. That's why I'm giving you the video here on a Sunday night. Hope you appreciate it. Mirroring it in many ways, its efforts during the financial crisis that were rolled out over several months. Sunday's move includes multiple program rate cuts, QE, which is quantitative easing, but all in a single day. That typically happens over time, different days. This all happened in one day. I'm going to zip you over to CNN. U.S. stock futures hit limit down after Fed cuts. This is at 7:11 in the evening, and that's March 15th. Plummets 1,041 points, or about 4.5%, while the NASDAQ futures were down 4.5%. Investors were unassuaged by news. That's interesting, that the Federal Reserve is cutting interest rates to zero. U.S. stock futures dropped 5%. So I guess that means that they weren't impressed. That's what I'm getting from it. So again, love to hear the input on this. What should you do? I'm here to tell you it's time for some independent, out-of-the-box thinking. It's time to guarantee your money and stop playing the Wall Street RollerCoaster. Okay, I've been an investor for 25 years, an owner of a company in Freedom Wealth Services. I've worked out on Wall Street. I've seen the horrors. I've seen the ups and downs, and I'm here to tell you, even the interest rates that lots of people say that people get on mutual funds, 8%, 10%, 12%, it's all fake. They're not counting all the fees, all the taxes, all the downside. That's not real rates. If you want to find out real rates, you want to do indexing with a zero floor so you have no downside, especially if you're conservative or moderately conservative, or if you're looking to retire in the next 5 to 10 years. Certainly if you're retired already, there are ways to guarantee your hard-earned money. Here's the question: how much money can you afford to lose? Okay, would it be shocking to you to tell you that we have outperformed the market significantly, but on a guaranteed basis, capturing the upside, but none of the downside? I've heard from many fund managers, even recently, saying to their clients, and I'm not going to start naming names, but saying, hey, clients want 100% of the upside. They want to get all the upside, but they want to take no responsibility for the downside, where you can't have your cake and eat it too. Well, I'm here to tell you, all the money managers out there, all of Wall Street, that is false. It is untrue. My clients have been capturing the upside and guaranteeing that there is no downside. The worst that can happen in any given year is a 0%. We call that zero is your hero. If you want to hear more about that, make sure to contact me. I'm going to leave my email and phone number in the description. I'm going to leave my website. It's time to take affirmative action. I'm making a new pledge here. I'm not going to fiddle around here and joke around and say, hey, people are, on this Wall Street roller coaster. These are the financial lives of clients, families, and you know what? You don't have to be on that up and down swing. I'm telling you, the earnings reports that are coming the next couple of quarters with what's going on in the world right now, it doesn't look good. People aren't traveling. People are not going out. They're not going to the shopping malls. They're not going to concerts. I don't think it's factored into the pricing. I hate to be the deliverer of bad news, but the Fed Reserve is acting accordingly because they're trying to keep the market up. But even then, the market looks like it's going down 1,000 points with them going to zero, because there's lots of people out there that are smarter than that. They know the economy is in trouble, at least for the short term. Okay, but many of you can't afford a huge drop. Can you afford another 20%, 30% drop in the market? And I'm not telling you to be in cash. If there's a way to participate on the upside of the market, I'm an optimist. I believe over the long term, the market will go higher. But if you need those assets and the market's going down, at the same time you need to pull money on the market for you to pay for your lifestyle, that's stressful. Do you need the stress? If you're pulling money out while the market's going down big time, you don't have the luxury to wait. So don't wait. Give me a call. We can put an umbrella of protection around your hard-earned money. Make sure that your future looks bright. All right, my friends, it's Bill Constain, Freedom Wealth TV. I hope you enjoyed the video. I had to get a little strong with you. Let me know if you liked it, if you like this kind of strength and this kind of determination and decisiveness and this kind of information. Like, comment, subscribe, and we'll see you on the next video. God bless you and your family. Bye for now.